A busy week is underway just before Thanksgiving, so let's see how the FX market is going to react. This is the week ahead at xam.com. Thanks for joining us. I'm Christina Marujos, and with me today is Rafi Boyajian, our lead market analyst. Rafi, one central bank meeting is on the calendar, and the RBNZ is expected to cut rates by 50 basis points on Wednesday. How might the Kiwi respond to such a move?
Well, Christina, we do indeed have an RBNZ policy meeting. We are now approaching the end of the year, and so we're basically looking forward to all the basically the final decisions for 2024 for all the major central banks, and the RBNZ will be the first basically to have its final policy decision, and oddly enough they're also going to be the last to have their policy decision at the beginning of 2025. So this means that there's actually quite a big gap between those two meetings, and this may be a factor in their decision on Wednesday, because on the one hand, we do have a 50 basis point rate cut fully priced in. We're almost certainly going to get that, but there's a chance that the policymakers might opt for an even larger 75 basis point rate cut. And the reason for that, apart from, of course, the big gap, and although the RBNZ, you can't really say that they're behind the curve, but there's a risk they might get behind the curve given the huge gap between the two meetings. But aside from that, the New Zealand economy remains really quite sluggish. Inflation, more importantly, has come down to within the RBNZ's 1 to 3% target band, and inflation expectations, which is something that the RBNZ does look at quite closely. It's part of one of their surveys that seems to be settling around 2%. So I think they could go 75 basis points, and should they do that, we might see quite a steep sell-off in the New Zealand dollar, especially against the US dollar, which is, as we know, has been rallying lately. On the other hand, though, if they stick with 50 basis points, there's a risk this might disappoint some investors, and the RBNZ might actually gain a little bit if we don't get anything overly dovish in their statement.
Rafi, you mentioned the US dollar, so let's cross into the United States. The PCE inflation report is out on Wednesday, followed by the Fed minutes. How might these data sets affect Fed rate cut expectations for December, and where would that leave the dollar?
So we are going to be getting a barrage of data on Wednesday because, of course, we've got Thanksgiving on Thursday. Markets will be closed. And so we're going to be getting the core PCE numbers, and this report also includes, let's not forget, other important data such as personal income, personal consumption. But of course, markets do tend to focus more on the core PCE price index. And we had heard from Powell in his last remarks that the Fed is expecting core PCE to edge up to 2.8% from 2.7%, and this would be in line with the pickup we saw in core CPI for October, and so this basically might cast doubt on whether or not we're going to get a rate cut at all in December from the Fed. We're also going to be getting the Fed minutes on Wednesday. Now, this might not be too important because we've heard from most policymakers, including, as I mentioned, from Powell. But nevertheless, we might get some hints as to whether FOMC members are in a rush to cut again, or whether they're kind of leaning towards possibility of a pause. So I think we could get some volatility on Wednesday because markets are kind of 60% pricing in those odds have been falling close to 50 on certain days. So it's a bit like 50-50, maybe more towards a rate cut. But any upside surprises in the incoming data, definitely I think we could see those odds fall below 50, and that would of course bolstered the US dollar even more. And so I think whilst that would be good for the dollar, it's not going to be so good for other currencies. It's also not going to be so good for the US stock market.
And finally, let's cross into Europe. CPI inflation is on tap from the Eurozone as well this week. Could the report solidify market expectations for a 50 basis points move by the European Central Bank in December?
Well, that is a good question, but I do think that actually there's a bigger chance that it's going to further diminish expectations for a double cut by the ECB in December, because we've heard from several ECB policymakers over the past week or so, and none of them are basically convinced that there is a need for a 50 basis point cut. All the rhetoric suggests that they're headed for a 25 basis point cut. And this is because despite the sluggish Eurozone economy, despite concerns about the outlook, and the fact that headline inflation has actually fallen quite substantially, we are now seeing a bit of a pickup in headline inflation. It could actually go up to 2.4%. We did recently also see a stronger than expected wage growth data for the Eurozone, and overall services inflation, something else that the ECB is also looking at, has been kind of flat around 4% in recent months. So despite the recent drop in headline inflation, everything else is kind of not quite giving the green light for the ECB to go 50. And then, of course, a further acceleration in headline inflation, which is probably going to be temporary, but nevertheless, the ECB might also use that to kind of remain cautious and go with 25 basis points. So I think for the Eurozone, if we see those 50 basis point cut expectations being pared back, the single currency might actually strengthen a little bit on the back of the flash CPI numbers.
Rafi, it looks like it's going to be another interesting week for the FX market. Thanks so much. This was the week ahead at xm.com.